Hi everyone, I'm Prof. O. In this video, I'm going to show you how to do a break-even analysis. Of course, in business, we hope to make a profit and not just break even, but it's important that we understand how much money we need to make and how many units we need to sell in order to cover our costs. So the first thing we need to do is to understand our costs. We need to specifically know our fixed costs and our variable costs. Our fixed costs are costs that do not vary or change with production. In other words, whether we produce 1 unit or 100 units, our overall cost per unit remains the same. We can use the example of a restaurant that serves pizzas. The cost of the oven used to cook the pizzas is a fixed cost. Whether you buy the oven to make one pizza or you use that oven to make 100 pizzas, the cost of the oven stays the same. Other examples of fixed costs are things like rent, telephone and internet costs, insurance, and any annual salaries paid to employees. The pizza toppings and ingredients would be variable costs. Variable costs vary or change with production. In other words, our total variable costs are directly associated with business activity. If we think about pizza toppings, we see that our total cost of pizza toppings, our variable cost, will be different whether we make one pizza or 100 pizzas. For simplicity, let's consider the example that one package of pepperoni can be used for 10 pizzas. That means if we make 100 pizzas, we will need 10 packages of pepperoni. If each package of pepperoni costs $8, then to make 10 pizzas, the cost of pepperoni is $8. And if we made 100 pizzas, our cost would be $80. We see here that our fixed costs do not vary or change with production. Other examples of variable costs include things like commissions, costs of inputs or ingredients, such as we talked about with the pizza toppings, and shipping costs. All right, so let's take a look at the formula. If we want to know our break-even quantity, in other words, the number of units we would need to sell to break even, we would take our fixed costs and divide by the difference in our sales price per unit and our variable costs per unit. I want to highlight something important in the denominator. The difference between the sales price of a product and the variable costs associated with that product is called the contribution margin. That is, selling price per unit minus variable cost per unit. The contribution margin is an important component of the break-even analysis because it helps us understand the portion of a product's sales revenue that exceeds variable costs and contributes to covering the company's fixed costs. Let's look at an entirely new example. However, let's stick with talking about pizza. If we have a pizza shop that has fixed costs of $100,000, its variable costs, meaning the variable cost per unit for making one pizza, as $3, and we sell those pizzas for $8, we can calculate our contribution margin to be $5, and that's found by subtracting our variable cost per unit, which is $3, from our selling price, which is $8. We can then find the number of units we need to sell to break even, and that is by using our fixed costs, $100,000, and dividing that by our contribution margin, $5. So 100,000 divided by 5 gives us the answer of 20,000. That means we need to sell 20,000 pizzas to break even. We can test this by looking at our total revenue, which is the number of units multiplied by selling price, our total variable costs, which is the number of units multiplied by our variable costs per unit, and our total fixed costs. Because if we break even, then by definition, our total revenue must equal our total costs. So by using our last example, if we sell 20,000 units at $8, we would earn $160,000 of revenue. To find our total costs, we would find our total variable costs. So to make 20,000 pizzas at a cost of $3 per pizza, our total variable costs would be $60,000. And our total fixed costs are our costs that do not vary with production. So our total costs are our total variable costs plus our total fixed costs, which would then equal $160,000. And that is our break-even point. the point where our total revenues equal our total costs. And that was a very brief introduction to the break-even analysis, a very important concept in business. Thanks for watching.